Well, what is going on, guys, and welcome into the video. Well, I'm not going to sugarcoat it or waste time, but this week absolutely will determine if we get an epic rally to the end of the year or if there's still a lot more pain to go and this was just the start of a much larger crash. So let's break it down and see what it means for the stock market, and I will lay out the scenarios for you so you know exactly how Wall Street will react, and I will tell you exactly what I plan to do in each scenario as well. It gets all kinds of convoluted and everything else, guys, but I promise I'm going to break it down and make it simple and just get you straight answers. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And make sure you have those little notifications turned on as well. Click that little bell or whatever. Otherwise, you will miss my videos because YouTube won't show them to you. And of course, if you aren't subscribed either, which many of you that watch me regularly actually aren't subscribed, I'd appreciate it if you at least check that for me. And if you're one of the ones that told me you missed it the first time, tomorrow is the last day to jump on the extended sale for the Market Insiders private group. Now, I know a lot of you guys signed up this week already, so hopefully we got everyone, but if not, jump on it now. All right, so we have the CPI report coming out on the 13th of December for November's data, and we finally had a nice inflection down last month after the previous 3 months coming in lower, but not by much, so it was nothing to get excited about until last month. That was the first time we could really get excited that, inflation may actually be inflecting down for real. But we have been fooled before with a large move down the month before, another leg up in inflation. So there is no guarantee that we will continue to trend down despite a lot of the data points looking better overall. So really there are 3 scenarios that will play out, but unlike in the past, because the Fed meeting is the very next day after the CPI data is released, what they say can change the calculus again after that CPI data comes out. So we have kind of multiple things going on that will influence or throw a wrench in what would normally be a very predictable scenario. So I will kind of tie all of them together and do the calculus for you and give you my plan for each so you know exactly how I will react to them and hopefully clear up the confusion because I'm sure the media will make a total mess of it all. And who wants to do calculus anyways? I mean, not me, but for you guys, I will do it. So let's cover CPI. Then we will move on to the Fed and what they are going to do after that. So stick with me here, guys. There's a lot to cover. So let's start with the positive one first, and that is we see it finally inflect down into the low 7s. And if we get this, the table will be set for a nice rally to the end the year on. And the reason for the Wall Street rally will be because Wall Street thinks the Fed will, kind of slow down or at least start to acknowledge the plan is working if this reading kind of comes in this range. Now, it's too early to declare victory and not enough of an inflection down to stop the rate raises altogether either. But Wall Street will start to trade, assuming the Fed won't hike us into oblivion. But the second scenario is that we see it really inflect down a lot. I mean, like we get into the 6s. And if that's the case, Wall Street will accelerate and really push stocks up as they start to kind of, speculate that, basically inflation is dead or is going down and is going to end soon. And yes, you're going to have those idiots that go on TV and say, oh my gosh, the Fed's not going to hike anymore. It's over. It's over. Don't listen to any of that crap either. The market hates uncertainty, so in that case, we're basically going to know that the Fed's, basic plan that they laid out right now is probably going to be the worst case scenario, and there is just a small, tiny chance that they get a little bit more dovish, and the market will rally big on that until the Fed speaks, which could kind of screw it all up, but we will cover that here in just a second. And lastly, we have inflation coming in hot. I mean, like back up into the 8s or the high 7s, and then the market will not wait for the Fed meeting to the next day to kind of basically just sell off hard and just kind of crater everything. This is going to induce strong selling pressure into the markets. Now, probably not as bad as the media or YouTube will make it out to be, but it will create big selling pressure in the markets once again until the Fed speaks, which could actually alter that again or make it worse. So let's discuss the Fed next since everything kind of hinges on them. Now, I don't know why this next point doesn't really get talked about, but it's critical to understanding the why behind the Fed. I guess it kind of ruins a good fear video or article since it takes kind of that sentiment away from them and, kind of gets rid of all the sensationalism or whatever the heck you want to call it that goes on with the media and YouTubers. 2 points I want to cover is 1, the Fed is actively trying to create more unemployment, and so far they have not been very successful. If we could just get that number back to normal, it would really help the inflation fight, and don't worry, if it does go into the 4s, which is where it should be during normal times, that's a very normal rate of inflation, or not inflation, excuse me, a very normal rate of unemployment, the YouTube and the media freak out about mass layoffs and unemployment, doom and gloom worse than the Great Recession, maybe even the Great Depression is coming. The Fed is actively trying to increase unemployment, not increase employment like they were doing in 2009 moving forward. Just getting it back to normal is 4.5 range, and then it kind of gets up into that 5 to where we really start thinking it's kind of bad again. and basically talk to me when we see a 6 in front of that number, as that is when I will actually get concerned. But I know I just ruined a good fear video for somebody out there. I apologize, guys, but 4 to 4.5% is kind of normal and kind of where you want to be. And right now we're at like 3.7. So we got to get there first before we can move into the danger zone per se. And 2, the Fed is also actively trying to induce a mild recession to help out with inflation. Again, the exact opposite of every other recession and Fed action in the past 30 years, guys. Think about that. This is a very unique time with the Fed doing very unique things, which makes what they are doing and the reasons behind it less predictable, and is confusing the heck out of all the folks that are, like to draw pretty charts and graphs and, all this other crap like that you see out there. It's just confusing those guys like crazy. So if the CPI print comes in at the low 7s, I suspect we get the 0.5 to 0.75% raise, along with continued language of slowing of the rate hikes, now not stopping, just slowing the pace until they hit the rate they want, and then keeping them there for an extended period of time. Basically, expect verbiage afterwards to reflect the slowdown of the rate hikes to see how effective they are, and more importantly, give it a positive but cautious tone, which is appropriate at this point in my opinion. The market will take this as a positive overall, and we should see a rally through the end of the year. Not going to be crazy or anything like that, but we should see a nice rally through the end of the year. In this scenario, I will continue to buy stocks as they hit my price targets and continue my modified DCA. It seems to be different stocks that I'm buying every week, so I will continue to be a buyer, but not as heavy as I was back in June or back in October and November. That was the time to go wild and buy big, but that doesn't mean you completely missed out either. The deals are still great on many great stocks, so I will continue to be a buyer. But if the CPI print comes in, really low, like in the 6s, the market will absolutely try to have some violent rally up and may accomplish it at first, but I think the Fed will do everything in the power to try to curb that expectation in that crazy violent rally. So I would expect the same verbiage and rate hikes of 0.5 to 0.75, but they may even be more hawkish in their commentary just to keep Wall Street from losing its freaking mind, and the speculation will start on Wall Street that the Fed has done and all the other stuff that will absolutely start if they don't almost go overboard with the hawkish talk a little bit. I think the Fed will be very clear and send a very strong message that that is not the case. They are not done hiking. And if this is the case, my strategy will be the same as the first scenario. I will just continue buying at my price targets, but I will not get caught up in any FOMO like many people did back in August and September on that rally that happened back there. There's no need to FOMO to anything, especially in this type of market, guys. It's just not necessary. But how does the Fed react if the CPI is in the high 7s or low 8s is basically the double whammy that nobody wants? That would make it much more probable that we get the 0.75 instead of the 0.5, and they will probably say they're going to continue to raise aggressively because they are thinking 5% or maybe even 6% now is where they want to get to in the end. If that happens, all I can say now is look out, as that may send the market back down to new lows really fast. Basically, no Santa this year. You basically get the Grinch with a load of coal. That's what you're getting. Now, do I care about that, or am I concerned at all? Honestly, no, I'm not. But I will do 2 very specific things we will discuss here in just a second. But I actually welcome it, as they are just short-term headwinds that will give me some incredible discounts. And I know this is how real wealth is built. Through times like these, despite how scary it is, despite the narrative, despite everything else out there, that is the facts with these types of markets. What? All of a sudden the Fed gets really aggressive and now I'm supposed to believe Tesla or Apple or Google are terrible companies because that is how the market will be pricing those stocks? That's how the market will price them. That's going to be the price they're priced at, is that they're terrible businesses. But that's just ridiculous. It will simply be an opportunity for those that are prepared and have a plan to take advantage. So please do that most of all. And that's absolutely what this is. Great businesses on stupid discounts. That's what will happen. And that's the bottom line with this particular scenario. So in this case, I will do 2 things like we just said. 1, I will still be buying, but I will be selective, as when you have a big fear event like this, the VIX will spike and the sell-off will last longer than a day, guys. I promise that. Waiting just a few days will bring more stocks not only into my target ranges, but into the lower parts of those ranges, and some may even hit stupid low territory. Don't know about you guys, but that sounds exciting to me. And second, I will buy as much of the fear as I can during that time and stay disciplined with my buying. This is not the time to speculate, so make sure you have your cash ready, your price targets written down, and a plan laid out to execute too, because that's exactly what I will be doing. And if you want to see my price targets for every stock I'm looking to buy, see all my buys and sells in real time, and take 5 courses for free, and discuss it all with me directly, make sure you sign up for the Market Insiders private group. Remember to check out the pinned comment down below to become a member and at least look at everything you get. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.